JP, good to see you, brother. How you doing? You're the first one in today. Joe, evening. Good to see you. How you doing? My weekend was quite busy actually, but I saw my friends. One of them has opened up a coffee slash bar slash shisha lounge, and I went to his place on the weekend. Evening. Good to see you all. How you doing? How was your weekend, Joe? Evening, Miles. How's things? Things are great. Good to see you, Autistic. How you doing? Yeah. So I visited him. Great. How was your day, Miles? It was good, JP. Hello, Miles, the CMF members. Good to see you, Scott. How you doing, brother? How you been? Good evening, Miles. Hope you had a great weekend. I did. Good to see you, Adi. How you doing? Okay, I'm just trying to pin the live show before we start off. Okay. T, good to see you. How you doing? How you been? Okay. Good evening, Miles. How are you doing? I'm doing great. Kelly, good to see you. How you doing? Share the live. Let's go, Scott. Absolute facts. Okay. Let's do the intro disclaimer. What we're going to go from tonight's live. By the time everyone should be tuned in for the first part live. Welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Mouse Family. My name is Miles. You can tune to this live Monday, Friday, 10 p.m. London time onwards for the most recent news regarding cryptocurrency, CBDCs, AI, politics, and regulations. Pretty much all the information you should know about regarding the world completely transforming into a digital space. The disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. So on tonight's live, we're going to be discussing on why the markets have taken a dump. There's two possible reasons. We're also going to be talking about regarding the rebound that the market's going to be having very soon. We're going to talk about some institutional news that's going on inside the crypto sector, some banking news that's going on inside the crypto sector, and obviously some Ripple news to go through on tonight's live as well. Before we go through any of those news topics, the first one being the plunge that's happening inside the crypto space, we're going to go through the comment section first and then straight to the first news. By the way, thank you so much to everybody who has already liked and retweeted this live show. If you're watching this essentially right now, thank you so much. If you've liked and retweeted this live show, thank you so much. And you're watching this on X. If you've just liked the live as well, and you're watching on YouTube, thank you so much as well. CMF members, if you haven't, smash the like buttons and smash the retweet buttons and put a comment outside the live. Anything you want. You want to put a fire emoji outside the comment section on the live, go for it. You put a rocket emoji, you know, hashtag XRP. Just put a comment outside the live, essentially on X and on YouTube. And thanks so much to everyone who's honestly smashed the like buttons and the retweet buttons. Now, moving on from that to what's been happening inside the crypto space. Hi, Miles, the CMF family. Everyone, good to see you. How you doing? How you been? Good evening, Miles, the CMF. Free Forever. Good to see you. How you doing? Shared live. Let's go, Scott. Absolutely facts. Miles, any news on SHX? No news so far. That's come across me. Evening, Miles, the CMF. Davey, good to see you as well. How you doing, brother? How you been? Hi, Miles, the CMF. Stormy, good to see you. How you doing? Let's go, Miles. Let's go, Scott. Feels like these market dumps are never going to end. T, they will. And once they do, the rebound is going to be absolutely ballistic. Also, something essentially, came to my attention looking through the charts, looking through the news, looking through the surge that's happening right now in stablecoins. So here's an angle that I'm looking at that I'm not too sure on, but I want to share it anyways. As you all know, we are incredibly closer to regulations. We're incredibly closer to a Clarity Act, to more crypto regulations on the way, not just inside the United States, but on a world stage level. The UK is moving much more close to regulations. So is Canada, so is Australia, so is Japan, so is Hong Kong, the Middle Eastern countries, the list just goes on. Now, what I'm starting to realize that, the old saying that I used to say, and I think JP will remember this, and anybody else will probably remember this, me saying this particular sentence, which is, they all sit at the same dinner table, All of these world leaders, they all sit at the same dinner table, even though on the news sometimes it may not look like that. But in most senses, we're all getting played all the time. So, knowing how close we are to regulations on a world stage level for cryptocurrencies, is what's happening right now, because we're so borderline to regulations, is what's happening right now a way to push people more into stable coins? Because what happens when people go into stable coins is USDT, USDC, RLUSD, PYUSD, FDUSD, and the list goes on. All of these US dollar stable coins start printing more stable coins the more people shift over to stable coins. So because we're so borderline in a digital world to regulations, is this what's happening right now essentially a push to push people more into stablecoins? So more stablecoins are printed, essentially more US dollars are printed, going into a digital world, the US dollars remaining that number one dominance, even though it still is right now in a digital world as well. I mean, in a fiat world, the US dollars rule still. In a digital world, it's still ruling. But, for example, the EU wants to push out their own European stablecoin to compete with the US dollars, for example, or essentially Russia wants to come into the game, and essentially China wants to come into the game. China finding out that, the Trump might be using stablecoins to wipe out their debt, infuriated them, essentially what Russia had to say. But is this a way, because we're so borderline to regulations, to push people more into stablecoins? So more US digital dollars are being printed right before regulation. So the dominance essentially of the US dollars carries on forward into a digital world, because so much US dollars is being printed right now in a digital sense. The same way the Fed will turn on the printing machine, Tether is essentially turning on their printing machine. So is USDC, so is RLUSD, so is PYUSD, so is FDUSD, the list goes on. They're all turning on their printing machines and printing more US dollars, more US dollars, more US dollars, digital US dollars, borderline to a regulation world, so that going forward, the US dollars remains dominance in a digital world. Is this just a way to push people to that essentially side? Is something that I'm coming to, because the old sentence that I used to say on the live shows was, they're all sitting at the same dinner table. It might not look like it on the news, but all these world leaders are sitting on the same dinner table. The only ones that are being played is us. They think thousands of steps ahead of us. So is this a way for them to push more people into stable coins right before regulations? So more US dollars is printed, going into a digital world. The US dollar dominance continues forward in a digital sense, borderline to regulations. Because 2026 is going to be absolutely ballistic with regulations and institutions. I mean, Binance, thinking about a timeline, Coinbase, Binance, Crypto.com, Kraken, every exchange, every crypto exchange you could pretty much think of. And then on the other side, every institution you could pretty much think of, Goldman Sachs, Franklin Templeton, JP Morgan, I mean, the list just goes on. They've all prepared, some BNY Mellon, they've all prepared some sort of institutional department to cater to what's about to happen next. So I do believe that we are being pushed into dollars, US dollars, due to the regulations happening next. I mean, everything's one big plan. I mean, the whole crypto space was one big plan. It didn't just come about out of nowhere. I said this for the longest time. Bitcoin timeline didn't add up. 2008 massive crash, 2009 Bitcoin pops out of nowhere. It was a bit odd, day one. World Bank doing testing on essentially digital payments. It was successful. COVID happened straight after. Percentage usage on Apple Pay, Google Pay, Samsung Pay went skyrocketing during COVID. People started moving away from cash. It was all planned. So it's just a conclusion that I'm coming to. Are we being pushed more towards US dollars on purpose so that US dollars dominance continues going forward? Because they're printing more. Tether's printing more, USDC is printing more, RLUSD is printing. I mean, you're seeing the numbers essentially coming in. So that's the conclusion I'm coming to, because we're so borderline to regulations, is that's what's going on. They're just pushing us into dominance, digital dollar dominance, before we go into more regulations. So the dominance continues going forward of the US dollars. But now, going into the first news, but I just wanted to share you with that, something that I'm, thinking about essentially. Because it just seems odd. Everything they do, every footstep they take inside the market space, there's something underneath it. because they all sit at the same dinner table. Now, first news on tonight's live. Before we actually do that, let's go back inside the comment section. Vanguard starts with ETFs tomorrow. BTC, ETH, XRP, Sol. Wow, $11 trillion company joining crypto. It is quite amazing, honestly. Do you think that XRP will hit 3 digits by the year's end? Jake Caliver made the bold prediction. I don't want to, badmouth anyone inside the crypto space. When I do badmouth crypto influencers, I don't mention them by name because people are, they're a bit touchy-feely these days. They go straight into suing. It's not like how it used to be in the old days. But I don't personally know Jake Caliver in any sort of a way. Just want to put that one to the side. Regarding his prediction of 3 digits for XRP, look, a few things have to fall into place for 3 digits, 4 digits, 5 digits for XRP to be happening. It is going to be happening. 3 digits, 2 digits, 3 digits, 4 digits, 5 digits. In my opinion, 100%, 1 billion percent, 1 trillion percent, 1 quadrillion percent, it won't happen. Few things have to fall in line, though. Is that few things going to be falling in line within 30 days? I hope so. The reality of it will probably be no. But I hope so. Now, because 30 days is not enough time, but in 30 days, a lot of things can happen still. The spot ETFs are taking a lot of XRP off the market. They are definitely. The bounce back is going to be bigger than the dips, and yes, they are. And I'll explain why a little bit later on. Yeah, you're right. They all sit at the same table. You have said this for years. That's true. I'm holding my XRP clearly. Think it is organized effort to push the retailers out of the market, designed for institutions. Just my personal thoughts. I agree, Scott. I agree. I mean, all these major exchanges, all these major institutions are now catering to institutions going to 2026. They don't really care about the retail section anymore. I was hoping BlackRock has caused this dump in order to bring out their XRP ETFs so they can get it cheap. Fair enough. Happy Monday. What up, Miles and CMF? Ray, good to see you. How you doing, brother? Great analogy. Let's go, JP. And it makes the dollar stronger too. It does. It does. The more people going, that's actually a great point, JP. The more people essentially that go into stable coins, it strengthens the fiat US dollars as well, because that's what's backing it. Fiat US dollars is also backing RLUSD, USDT, USDC, FDUSD, and the list goes on, PYUSD. So that does strengthen the US dollars as well. I think we're all genuinely being played right before regulations. And it's to strengthen the US dollars going forward in a digital sense and in a traditional sense. Don't get discouraged. Something good is about to happen for XRP, just my belief. 100% I agree with you. 100%. This is why the markets don't stress me out in any sort of way, but I always just try to think of what their next step could possibly be. But I never get stressed out of the markets, I'll be honest. This is nothing. Market stress is nothing compared to different type of stress in life. But yeah, market stress is nothing. That's why I never get stressed out. That's why I'm always happy when I share the news, because I know what's going to happen next anyways. So they can, frustrate us, push us out of the way, and so on. Couldn't care less, because I know what's going to happen next. Don't get discouraged. Yeah, 100%. I'm agreeing with you about stablecoins. I see the picture as well. Yeah. Thanks, Miles. I did not mean to mention names by back. No problem, Scott. Brother Miles and CMF commenters, good to see you. How you doing? Now, crypto plunges. 2 reasons are on the table. Crypto plunges as US stocks rebound. Why is Bitcoin not following the US stocks or tech stocks in general? A rare and striking essential divergence between traditional markets and crypto has emerged today, raising questions about whether Bitcoin is signaling deeper macro stress or preparing for an explosive rebound. Charts comparing BTC, ETH, and the Nasdaq and the Russell Index illustrates the disconnect essentially is happening early. While both stock indices staged sharp V-shaped recoveries, Bitcoin failed to mirror the bounce back and continued trading near the session's lows. Ethereum followed the exact same pattern, deepening the sell-off across the crypto markets. This split has sparked 2 competing narratives. The first argues that Bitcoin may be front-running a potential US market downturn, acting as an essentially early risk-off indicator. Historically, crypto has sometimes reacted ahead of equities when liquidity conditions begin to tighten. The second possibility is far more bullish. If equities remain stable, today's aggressive crypto drop could represent a shakeout before a multi-week rally. Essentially, such a sharp divergence between correlated risk assets is unusual, and traders are watching closely to determine whether this is a warning signal or a reset before an upside momentum returns. Well, we do know we're going to massive regulations, the biggest one being the Clarity Act. That is a massive rebound if we get a Clarity Act. And as I said, two outcomes will happen once after we get a Clarity Act. The first outcome will be the market won't react as much, it will be buy the news, sell the rumor. And then a space about a couple of weeks, the market will do a massive up, like, continuing to go up. The second outcome will be the market will react the way it's supposed to on the basis of a Clarity Act regulation and start steadily going upwards. Now, the two outcomes, one of them is it's China. China's big announcement of their cracking down on stable coins, and they're still continuing their ban forward on cryptocurrencies, which is an absolute load of BS because the numbers were in. The biggest buyers, essentially, of crypto, essentially Bitcoin mining equipment, was China. Last year, while China was still in a crypto ban, the numbers were in. The biggest purchasers of Bitcoin mining equipment was a country that banned Bitcoin mining. So regarding China making that bold, essentially, speech just a night ago regarding they're cracking down on stablecoins and still continuing their ban forward on Bitcoin mining, crypto, and so on, it's an absolute load of BS. But obviously, people will react to that news because some people might not know the actual facts. That China is actually the biggest purchaser of Bitcoin mining equipment, according to the companies that sell the Bitcoin mining equipment to a country that's banned. So that's a load of BS coming out of China. But they did manipulate the market based on their announcement. But this is why I said they all sit at the same dinner table where the ones that's being played. So another outcome is the Japanese situation that's going on. Is Bitcoin's sharp drop originating from Japan? So here are the claims that's coming forward. The cryptocurrency market experienced a sharp sell-off on December 1st, essentially today. The selling wave, which partially subsided last week following the massive liquidations at the beginning of October, accelerated again as the new week began. Bitcoin fell nearly 7% to below $84,000. Ethereum also fell 7% below to $2,800. Solana essentially saw a new early 8% drop in early values. The crypto market lost 17% of its value in November following forced liquidations in October. But selling essentially pressure eased somewhat last week. However, the December 1st drop has revived downside risks. Sean McNaughtley, essentially FalconX, Asia Pacific derivatives director, noted that December is traditionally a period when risk appetite declines, and that the markets and made the following assessment on the market space. Our biggest concern is the stalled inflows into Bitcoin ETFs and the lack of buying interest at the dip. We believe structural pressure will continue this month. The next critical support level for Bitcoin is $80,000. While US stock markets started essentially this week weakly, global macroeconomic developments are also weighing in on the crypto markets. Bank of Japan Governor Kazu December interest rate hike signal pushed Japanese bond yields sharply higher. CoinX chief analyst Jeff highlighted the possibility of the yen carrying trade unraveling. He said, the rise in Japanese government bond yields has increased the likelihood of a rapid unwinding of the yen carry trade. This has historically weighed in on global risk assessments, including cryptocurrencies. Strategy essentially also, which holds a large amount of Bitcoin, made a significant announcement the same day, announcing that it had set aside $1.4 billion in reserves to cover future dividends and interest payments based on that Japanese announcement. This move essentially was aimed at easing concerns that the company might be forced to sell Bitcoin. So there's some rumors going around that strategy might be forced to sell its Bitcoin. But there's also a rumor going around from CryptoQuant's CEO, Analytics, coming out and suggesting that MSTR stocks are undervalued for what they actually are. However, the announcement didn't fully appease the markets, and the company stocks fell as much as 7.9% during the day. Strategy said that the new reserves will cover the company's dividend obligations for at least 21 months, and stated that it plans to keep the reserve extended for up to 2 years in the future. According to Bloomberg data, spot Bitcoin ETFs in the US saw inflows of just $70 million last week. While the past month, there have been outflows of $4.6 billion, primarily driven by iShares Bitcoin Trust. Also, regarding the ETF market cycle in general, so I'm going to show you some numbers. November proud to be the turbulent month for crypto exchange ETFs, with Bitcoin products leading the way in losses. Investors pulled billions out of the markets as Bitcoin's price continued to struggle, marking essentially the worst month for many funds since early 2025 because the number is in. Because now at the 1st of December, the numbers are in for November. Spot Bitcoin ETFs had their largest monthly loss since February, mainly because investors kept selling. Data from Soso Value revealed that those funds saw $3.48 billion leave in November. Withdrawals also continued for 5 essentially weeks straight, from November 12th to November 18th. The biggest single day outflow was $903 million in November. By the end of the month, analysts saw a small improvement as 3 days of inflows hinted that investors were slowly coming back. The Nasdaq essentially ISE filed to essentially quadruple options trading capacity for Bitcoin's iShares Bitcoin Trust. This news essentially may have encouraged more market activity. Bitcoin's price struggles affected the whole crypto market space. The top coin dropped more than 6% to $85,653, causing big losses in other major assets. Ethereum essentially ETFs also had their toughest months, losing $1.42 billion, showing that November was a tough time for crypto, even though it wasn't supposed to be. On the other hand, Solana ETFs did quite well, gaining over $600 million across more than 20 days. However, the growth slowed after 21 share Solana ETF launched, which lost $34.4 million on its 5th day. XRP ETFs also did very well, with 9 days of inflows out of the 10, which is tremendous. In essentially a month where the market is completely tanking, XRP ETFs did 9 out of 10, brilliant in terms of inflows, adding $666 million. The biggest inflows was essentially November 14th, when $243 million went into the fund. Dogecoin ETFs, however, struggled. Grayscale's Doge fund only had $1.4 million in its first day, much lower than expected. But everybody saw that one coming. I'm sorry, but going into a digital world of regulations, honestly, going into a digital world full of regulations, institutional money, and so on, if you're holding Dogecoin ETFs, you got to ask yourself some major questions of what the hell are you doing? No offense to anybody that is essentially holding Dogecoin whatsoever, but that's one thing. Holding Dogecoin as a cryptocurrency, that's one thing. Why not? If you want to do that, Elon Musk is always behind it. But going out of your way to go for a Dogecoin ETF when you have access to a Bitcoin ETF, an Ethereum ETF, an XRP ETF, a Solana ETF, it just confuses me. Why would you want to go for a Dogecoin ETF when there is zero utility behind it? Again, nothing towards Dogecoin in any sort of a way, but that makes no sense to me. So we all saw that one coming. Dogecoin pretty much doing nothing in terms of inflows or outflows. BlackRock IBIT, one of the largest US Bitcoin ETFs, also suffered one of its worst months since debuting in early 2024. On November 18th, the fund experienced its largest single-day withdrawal on record, losing $523 million. By November 25th, IBIT's total monthly outflows exceeded $2.4 billion, nearly 8 times the losses recorded in October and marking its second worst month ever. Despite these setbacks, IBIT remains a major player in the crypto ETF space. The fund still holds $57.71 billion in net inflows and manages over $119 billion in assets, representing essentially roughly 6.56% of Bitcoin's total market capitalization. BlackRock also essentially recently highlighted its IBIT profitability. Reportedly, the ETF has outperformed more than 1,400 other BlackRock products. In just 341 days, it generated $245 million in annual fees and assumed over $70 billion in assets. In a related move, JP Morgan also to offer structured tracking IBT essentially services as well, putting that to one side. But regarding the ETF market space, Bitcoin, Ethereum, XRP, Solana, Dogecoin, who did well in the month of November? In the month of November, Bitcoin ETFs did bad, very bad. In the month of November, Ethereum ETFs also did very bad. In the month of November, Solana ETFs did good. In the month of November, XRP ETFs did excellent. 9 out of 10 days, money was inflowing. In the month of November, Dogecoin barely moved in terms of an ETF. We all saw that one coming, to be fairly honest. Now, is this all doom and gloom for the market space? Not really, no. Again, you got to look at the timeline. borderline to regulations, a lot of things are happening. So Binance, for example, is what we talk about next, which is relatable. CryptoQuant's CEO, Kai-Yang Ju, which we've talked about before. This man has given us so many perspectives in the market space. And his recent perspective came out today from a, analytics perspective of the market space, using some, factual information as well, which is using Binance's reserve ratio, which he is now calling screams cycle bottom once again. So here is his perspective that's come out today. On December 1st, 2025, CryptoQuant CEO Ki Jong-un pointed out something that made veteran traders sit upright. Binance's Bitcoin to stablecoin reserve ratio just plunged its lowest reading since 2018 crypto winter, essentially, catapultations. Now, this obscure but brutally reliable metric divides the amount of Bitcoin held on Binance by the exchange's total stablecoin balance. When it collapses, it signals relentless spot buying and mass withdrawals, exactly what we're seeing right now. So this is something that's repeated before. Now, in December 2025, the ratio has breached the same danger zone while Binance's spot volume remains near all-time highs. Translation: buyers are vacuuming up every BTC in sight and taking self-custody at record pace. And it's not just BTC they're doing it to. Stablecoin inflows, meanwhile, have flatlined. There's simply no fresh dry powder left to sell against the bid. Supporting data is piling up. Bitcoin exchanges outflows hit a 2025 peak low last week. Long-term holders' supply reached a new alternate, and the exchange's BTC balance is down over 100,000 coins, lighter than the 6 months ago. Of course, nothing is guaranteed in markets, and a hawkish Fed pivot or a major black swan event could delay the fireworks. But purely from an on-chain supply-demand perspective, the setup is a carbon copy, the most profitable moments of the last decade, when the world's largest crypto exchange, Binance, literally runs out of Bitcoin to sell while demand is essentially its rapid price, has only moved one direction historically. And it wasn't down, it was up. The 2008 style low is in, the fuse is lit. Whether the rally starts tomorrow or within 6 weeks, the data is screaming that the next leg higher could be historic. Traders who ignored this signal in the past paid daily. Essentially, those who listened printed life-changing gains. So, interesting perspective, I would have to say, basing on Binance running dry on Bitcoin, people taking their Bitcoins off essentially Binance's exchange or crypto in general off exchanges and putting them in cold storage wallets. Exchanges run dry, the vacuum opens back up and starts scooping up, and the buying pressure essentially comes in. Buying pressure comes in again, is what essentially this is based on. It's happened before, and they're suggesting, well, he's suggesting from his perspective, that it's going to happen again. Now, CryptoQuant's CEO has been right in the past on, certain perspectives he's giving out. This could be also another one, but it's interesting that he has used, essentially, factual information to back it up. It's something that's happened in the past, possibility of happening again. Now, moving on from that to Goldman Sachs. As I said, it's not all doom and gloom. There's actually a lot of positive things that are happening inside the crypto space, but they're not, essentially, they're all being overshadowed by the negative news that's going on inside the crypto space. And I don't know what it is. And I don't know if, personally, I hope everyone's realized this by now, that I don't know when it started, but there was a time period where crypto news started getting over-exaggerated as we moved along. For example, we would have in the past some sort of bad news inside the crypto space, and people would move off essentially within 24 hours to a new set of news, essentially. But I don't know when this time period started, but now when we get some sort of bad news inside the crypto space, it's just over-exaggerated. Absolutely over-exaggerated. And it could be the same news we've had in the past, but somehow it comes out now, it's just amplified on a whole nother level. Honestly. Like the tariff news situations that we had in the past, I mean, sure, they impacted the markets for about a day or two. And then there was the same tariff news, in India getting tariff, China getting tariff, this getting tariff. And it was like 2-3 days, we all moved on. But then again, we on repeat, when we had a China news tariff situation, the market went downwards for 2 weeks. It was the exact same tariff situation. So everything is just being over-exaggerated, essentially, right now inside the crypto space. Any news that comes out that's bad, over-exaggerated. Any news that's good for the crypto space, overshadowed by the exaggerated bad news. I don't know if anybody else has realized this by now. And just all goes back to they're all sitting at the same dinner table. So here's, for example, Goldman Sachs. Goldman Sachs' Bitcoin acquisition. A bold $28 billion bet on crypto's future. Goldman Sachs isn't just dipping its toe in the crypto, essentially, waters. It's making a straight plunge. The agreement to purchase Innovator Capital Management, first reported by essentially by Cointelegraph, shows a calculated move to dominate the growing ETF landscape. Now, Goldman Sachs, we've talked about their footsteps inside the crypto space, especially opening their doors and acquiring a company, a crypto company. This isn't just about speculation. It's about essentially infrastructure, which is essentially what's going on regarding the institutional sector and the crypto sector. By acquiring a firm with established Bitcoin fund products, Goldman Sachs instantly gains expertise, regulatory experience, and a massive client base already comfortable with the crypto exposure. The deal, expected to close in Q2 2026, gives Goldman Sachs several immediate advantages. Instant scale, $28 billion in assets under management transfers immediately. Product expertise, ready-made structured Bitcoin products for clients, regulatory footprint, established compliance frameworks for crypto offerings, and market position, a leading role in the institutional crypto adoption wave. Goldman Sachs has been quietly building its digital abilities for years, but this Goldman Sachs Bitcoin acquisition represents an acceleration. The bank essentially plans to strengthen its ETF business, according to reports, which means we can expect several developments. First, existing essentially innovative Bitcoin products will likely be rebranded under the Goldman Sachs umbrella, giving them instant also credibility with traditional investors. Second, we'll probably see new hybrid products that combine Bitcoin exposure with traditional asset classes. And most importantly, this move positions Goldman Sachs to capture the next wave of institutional money inflowing into the crypto space, because 2026 is all about institutional money. As I said, Kraken Exchange, Crypto.com, Binance, Coinbase, the list goes on. Every crypto exchange right now has opened up a department for institutions to cater only to institutions. Why? Because they are the next clientele. 2026 is all about institutional clientele. Retail clientele, that's old news in 2026. It's all about institutions. As we approach 2026 completion date, watch for several developments. Increased regulatory clarity, 100%. More hybrid financial products. Now, why is 2026 the year of increased clarity for the crypto space? Because it's when the institutions are coming into the crypto space on a crazy astronomical level. And that's why, in terms of regulations, the clarity and so on, all that. More hybrid financial products and potentially a wave of similar acquisitions by other major banks. The walls between traditional and digital finance are crumbling, and Goldman Sachs just placed a powerful charge at the foundation. Just want to repeat that one last sentence there. The walls between traditional and digital finance are crumbling, which is facts, absolutely facts. Day by day, we're getting more news of institutions from all over the world entering the crypto space. From all over the world entering the crypto space. Now, this is what I mean. So much good news, but overshadowed by exaggerated bad news. Moving on from that to stablecoins. But before we talk about stablecoins, let's go inside the comment section first. Let's see what's happening there. As I said previously, this is a live show, so if you do have any questions, go from inside the comment section. I read everyone's questions and comments one by one and give everyone an answer. I don't leave anybody out, so if you do have a question, go for it. Okay, let's see where we're at inside the comment section. We were here. Okay, we're even buying any crypto, we are buying with stablecoins. Exactly, yes, facts. Brother Miles, the CMF, comment us, good to see you. What you're doing. Post a one if you think or know this is the best crypto group online. Hashtag CMF. Let's go. Post if you think we have the group leader with integrity. Thank you so much, Scott, for the kind words. Let's go, Scott. Any whispers for a date of the Clarity Act? Yes. What's going around is that the 4th or 8th is going to be the sit down for a Clarity Act. The discussion is going to be happening on that day. Good day, Miles. Mike, good to see you. How you doing? Don't sleep on XRP, XLM, H4, and XDC. I agree. Hi, Miles. Why so much dump on cryptos? Johnny, it's because of the Japanese situation and China situation, which it's oddly enough, it just makes no sense. China is the biggest purchaser of Bitcoin mining yet, coming on the news saying we're still continuing our ban on crypto mining and cracking down on stablecoins. But the numbers are in, and China has been the biggest purchaser of Bitcoin mining equipment, even though it's banned cryptocurrency. So making that speech was absolutely ridiculous to impact the crypto market space. Hi, Miles. Good evening, Miles and CMF. Bull XRP. Good to see you as well. How you doing? Yep. Good evening, all. Susie. Good to see you as well. How you doing? I don't see any chance for a bull run, is what Johnny is saying. It's 30 days is still. A lot of things can happen in 30 days, Johnny. Should I swap my XLM and XDC for XRP as I'll get better ROI? You would, yeah. You would definitely get better ROI. But again, no financial advice at all. If you want to do that, that's completely your choice. Once the Clarity Act is passed, I see good things happening. Until then, stagnation. I agree. XRP has value now, and we just don't realize it yet. I agree as well. Looks like crypto is no chance to... Johnny, have some faith. The ETFs should cause liquidations of XRP to the mass. Hi, Miles of family. Good to see you, Alex. How are you doing? Scott, yep. I think it will increase eventually. I agree. Crypto should not equal exaggeration. I agree as well. Thanks. I'm doing okay, my friend. Thanks for checking. Let's go, Scott. If I had both, I would keep both. They are similar roles. Good evening, Brother Miles and CMF family. Good to see you, so Funky. How you doing? How you been? I will catch up later for what I've missed from Funky. Hi, Miles. Richard. Good to see you. How you doing? I've reduced my bags to crypto with a strong future use case. They decided to dollar cost average into those. Nice. Share the live and repost. Let's go, Scott. Absolute facts. Hi, Miles and CMF. John. Good to see you. How you doing? We're all lucky that we got in before the institutions. Facts, absolutely facts. What Davey has said. And I used to say this on the TikTok live shows that when we used to do TikTok live shows about 2 years ago only, I used to say you want to get in before the institutions. You want to get into XRP, XLM, XDC, HPRO, so on, XDC before the institutions essentially come flying in through the door, so that essentially you getting here, institutions get here, and then they pump the rest out of it. But yeah, I agree 100%. I will all agree. Let's go, Scott. Miles, going back towards 2021 into 2022, this exact pattern of a bear market since January this year, we have been just going down. Do you think we are in a bear market? We're in a manipulated market? Because we've got to consider the fact that it might look like a bear market, but it's just a manipulated market. We're essentially at the stage of regulations that will open the floodgates for the crypto space, not overnight, but it will open up the floodgates for the crypto space to properly connect to the institutional sector in the biggest market space in the world, which is the US. And this is all happening right before Clarity Act. So in the past, we didn't have the ETFs, we didn't have the Clarity Act, we didn't have any of these movements. To suggest that we're in a bear market, just because the patterns are similar, no, because we've got to counter on the fact with the ETFs on a worldwide basis, the ETFs in Hong Kong and the US and so on, the institutions coming in, institutions creating and catering to the retail and the institutional sector now, exchanges catering to that sector as well. The amount of regulations, the amount of licensings, all these things has happened. And the government shutdowns, there's so much has happened. It's just a very, very highly manipulated market space. Extremely manipulated. But we get a Clarity Act, manipulation slows down. It doesn't go away, but it slows down. It's certainly for a lot of crypto projects, ones that have utility. Ones that have no utility will always be impacted by manipulation. Let's go, Miles. So I would say manipulated markets instead. Still, with how everything looks like this year, will we see $5 to $10 XRP within the last 30 days? Anything's possible within the last 30 days. But one thing is to fall into place for those numbers. 2026 for that number, particularly 5 to 10. Let's go, Miles. Thanks for all the those of us daily. Let's go, Scott. 2026 will be a crazy good year. Yes, definitely. Let's go. Yeah, because this year the downsides of this year was one. Gary Gensler was still a little bit in position. He's frankly gone in January. And the other downside essentially was the Democrats tried their best to stop the crypto space in every possible angle. The other downside was with the government shutdown. Again, Democrats trying to stop the crypto space. Every problem we had inside the crypto space was just Democrats. Honestly, every problem we came across was just the Democratic politicians. Gary Gensler, Democratic situation. Nancy Pelosi hates the crypto space, tried their best to stop it, Democrat. Maxine Waters tried to stop the crypto space from the banking sector, Democrat. Pocahontas tried to stop the crypto space, Democrat. Every hurdle we've had inside the crypto space is just the Democratic politicians just keep on throwing us more hurdles. And the biggest one being the government shutdown. Now, stablecoins. Stablecoins push banks to reevaluate financial strategies. So it seems like, that whole stigma about if you can't beat them, join them is maybe what's happening inside the banking sector. So stablecoins and banks are having some sort of discussion. Stablecoin companies and banks are having discussions and suggesting to banks that we don't need to go against each other in any sort of a way. Instead, we just need to work together, which is good, because that's a way to get the banks feel like they're achieving something and coming into the middle and so on. And in reality, it's just the stablecoin companies, playing the banks like a fiddle. But who cares about the banks? Because going to digital, we don't really need, essentially bank accounts. Wallets will do us fine. Stablecoins have risen to prominence, facilitating essentially large-scale financial transfers with greater efficiency and lower costs than essentially conventional systems. Their integration essentially into the mainstream financial ecosystem offers both challenges and opportunities, particularly for traditional banks. Confronted with essential potential erosions of their established roles, banks now find themselves at the crossroads about whether to essentially incorporate stablecoin technology or not. Historical precedents and payment systems provide crucial insights. The emergence of electronic payments in the 1960s to the 70s saw banks ceding control to independent card networks. This move resulted in significant losses, especially regarding pricing and branding power. Today, with networks like Visa and MasterCard acquiring substantial interchange, essentially fees, there's a reminder of past oversights. The advent of stablecoins poses a similar risk if banks don't strictly adapt to a digital world. To avoid essential reliance on external stablecoin issuers such as USDC, USDT, banks have the option to develop their own stablecoins. The strategy allows banks to create tailored products aligning closely with regulatory requirements and essentially enhancing their customer service innovations. Such essentially a move offers banks a chance to retain control over their payment systems. Issuing a essentially proprietary stablecoin shift this essentially control dynamic back to the banks, or making the banks feel like they're needed in a digital world. And sure, some people might still prefer to use bank accounts in a digital world, but eventually the majority will shift over to wallets. Once this essentially has come to the realization of they don't really need bank accounts anymore in the digital world. Forming an alliance with established stablecoin technology provides and presents a method for banks to advance economically and remain compliant. By collaborating with firms like Paxos, banks can quickly essentially develop compliant products as exemplified by PayPal's Street Partnership. Street partnerships offer a viable path without reinventing the wheel. These collaborations can ensure timely products and rollouts while preserving brand integrity. Proprietary essentially stablecoins can follow banks to keep control away from outside issuers. Collaborative partnerships would also aid swift market entities and essential entries for banks, and improve interoperability with global standards prevents insulation essentially in fintech. Stablecoins are reshaping the financial landscape right now, urging banks to act decisively. The future depends on strict essential decisions and essentially regarding payment systems and brand differentiations. By launching a essentially stablecoin, banks can establish new benchmarks and secure customer loyalty, positioning themselves as favorably inside an evolving economic environment. In other words, stablecoin companies are telling banks, look, you don't need to, go against stablecoins and try to take away rewards from stablecoins and so on. Why not, as a bank, just introduce a stablecoin? Instead, let's compete on that level than you trying to hold back innovation. which I agree with. You know, banks joining the stablecoin sector, essentially stablecoin companies or whatever, and doing some sort of collaborations, doing some sort of partnerships to introduce their own stablecoins, sure, go for it. Even though I don't like the idea of 50 different versions of US digital dollars, or 50 different versions of Euro digital, essentially, or pound digital, because it makes no sense and creates confusion, it's better than the banks essentially trying to hold back the crypto space by telling them to change essentially the Genius Act and remove stablecoin rewards and so on, because that's just stopping innovation. Rather have them on the same page, create your own stablecoin, let's just see who does best in that sector instead. That I prefer more. Because then the banks can introduce their own stablecoin rewards. If people want to go for their stablecoins, I prefer still go for RLUSD any day of the week. Now, I think genuinely that's a better idea than banks going head-to-head with stablecoin issuers. Just, if you can't beat them, join them. The world is changing. Stop trying to hold back innovation. Because all you're doing is delaying it and delaying it. Because it's going to happen whether banks like it, whether institutions like it, whether politicians like it. It doesn't matter what any of these people think, because the people that are running the show technically are people that could walk past you on the side of the road and you wouldn't even know. So it's better than essentially them trying to hold back innovation. Just join the bandwagon and then compete in that area. I agree with that 100%. Now, moving on from that to regarding stablecoins and banks, maybe coming to some sort of a conclusion. Brilliant. To the first digital group, essentially, who's planning to go public with their stablecoin as well, backing them. Before we talk about that, let's go to the comment section. First, let's see what's happening there. Then we go straight into the next news on tonight's live. So let's see where we're at inside the comment section. We were at here, I think. John says, Jake Caliber thinks that if the Clarity Act comes out before XRP price gets to a high level, then there'll be other choices for the market to use. Do you agree? No. Okay. It's in going into a digital world. I don't agree with what Jake has essentially, if that is what his question was. Jake essentially thinks that if the Clarity Act comes out before XRP's price gets too high, then there will be other choices for the market. So if XRP essentially price is low, Clarity Act comes out, then everybody's competing. If XRP's price is high, Clarity Act comes out, then XRP is the clear winner, nobody's competing. No, that's absolute load of BS. Okay, if that is what the question is suggesting. No, a Clarity Act will bring clarity across the crypto projects that have one use case utility. Two, it will bring clarity towards essentially their license. I mean, crypto projects that have licensings and essentially have acquired businesses and expanded their foot reach are the ones that will do best under the Clarity Act. And also, we're going to consider the fact that, yes, all crypto projects can perform the same stuff up to a certain extent, but it is also about their partnerships that they've established, their licenses that they've established, and what are the footsteps they have taken that their competitors haven't taken so far. And in terms of Ripple has taken so many more footsteps inside the essentially financial sector than any other essentially blockchain project out there. So it doesn't matter if a Clarity Act comes before or after a essentially rocket price of XRP. It doesn't matter at all, because they're miles ahead of their competition inside the financial sector. I mean, Ripple day one went to banks to design the Ripple payments. You never saw any other crypto project doing that. And they essentially brought banks in with Ripple payments. They made the banks come in, because if day one Ripple went and said, we have this new technology, it's a blockchain technology, and we want you to join it, the banks would have said no. Banks don't like to diverge into, a lot of banks don't like to diverge in that type of sector. A long time ago, they never wanted to diverge into that type of sector at all, to be fairly honest. I mean, some banks saw risk on, and the majority of banks saw risk off in general. So the idea that essentially Clarity Act before a price rocket, essentially, XRP goes skyrocketing and then we have a Clarity Act and then XRP wins, wrong. It could happen either way. It could be XRP's here, everything else is here, Clarity Act comes through, and then XRP goes up. So the idea that, we have to have a Clarity Act after XRP skyrockets is absolute BS. Because, again, it all depends on who has the most amount of licensings, who has expanded their foot reach the most, who has acquired more businesses to expand inside the financial sector. There's so many factors in play that it's not about, you know, price goes up and then the Clarity Act comes and then it's the clear winner. It's already the clear winner. Genuinely, XRP is already the clear winner in a financial sector. In terms of payments, it's the clear winner by a mile. In terms of Web3, essentially, or in terms of essentially AI, or in terms of gaming, that's a different factor. But in terms of payments, it's ahead by a mile. As I said previously before, Ripple can do things that other blockchains cannot do for their blockchain. I'll give you an example. The Solana Foundation cannot go and apply for a bank charter license or a Fed skinny account. They just can't. The AVAX Foundation cannot go and apply for an essentially bank and charter license and a Fed master account, essentially skinny account, in any sort of a way. Because they're not private, essentially. How Ripple essentially established themselves as a private, essentially, company going forward opens them essentially up to acquiring special types of licenses that other blockchain projects cannot. Can Ethereum's, you know, can Vitalik Buterin go to the essentially Fed and say, I want to apply for a Fed master account and a banking charter license for Ethereum? No, because it's not a limited, it's not a private company. So they cannot do things that Ripple can do to expand the XRP ledger. Ripple can take footsteps to expand the XRP ledger. Other blockchains can't do the exact same footsteps. Other blockchains have to wait in line and say, please look at me, please integrate me, while Ripple could just go, you know what, I'm just going to take the next footstep and the next footstep and the next footstep and just expand it myself. While other blockchain projects are standing in a line going, please pick me, please integrate me. Ripple doesn't have to do that. Ripple just takes steps forward and forward and forward and expand the XRP ledger itself. Doesn't have to wait in line to expand the XRP ledger. XRP doesn't have to go, please pick me and integrate me, because Ripple could take those footsteps for it by essentially making acquisitions, by purchasing out G Treasury, by purchasing out Hidden Road, by purchasing out essentially Metico, by partnering essentially Metico with essentially IBM and Standard Chartered Bank and so on. So the idea that Ripple's XRP's price has to be here and then a Clarity Act comes and then the XRP essentially is a clear winner is an absolute load of BS. Ripple is already the clear winner in the financial sector by a mile. So the idea that, you know, someone is suggesting that price has to be here for XRP, then a Clarity Act, no, absolute BS. Absolute BS. I guess no one can predict the markets at the moment, as you have saying that quarter 3, quarter 4, 2025 will see 5. I have said that, but I didn't expect a democratic essentially government shutdown. Hi, Miles and CMF family. Good to see you, Carlos. How you doing? Now we're looking at 2026. Yep. All the Congress people that you mentioned are on the crypto markets and making money too. I agree. You can't make me believe they aren't. 100% they are. But the Democrats definitely throw a hurdle for everyone inside the crypto space. Now, I have not listened to faith in crypto, but I'm just sick of the manipulation BS. Everybody is, trust me. I have not lost faith in crypto, but I agree 100%. Even Miles, Peg, good to see you. How you doing? Share the live, hit the like button. Let's go, Scott. Submit your crypto questions, discussions, Miles have read everyday facts. Strength of our group is toughness. Let's go. Strength of crypto group is our leadership and toughness. Let's go. Ripple is our special forces major SEAL team for crypto environment. Facts. Even Miles and crypto peeps, good to see you, Sampa. How you doing? Just to be upfront, what is this person on about? Okay. Industry adoption is the most important thing needed for price to rise. Yes, 100%. Regulations equals to institutions and regulations equals to utility, equals to liquidity, and so on. Now, the first ever, happy Pisces, good to see you. How you doing? How you been? The first ever, essentially, the first digital group plans to merge the CSLM, Digital Asset Essential Acquisition Corp 3, to go public in New York. More companies, more blockchain companies are going public right now. The fact that everyone outside the XRP army treats it like a fight club makes me think something is up. Interesting. Now, I agree. Now, the digital Hong Kong-based issuer of FDUSD, the equivalent of essentially USDT, USDC, RRUSD, PYUSD, First Digital is planning to go public in New York, adding to the list of crypto companies seeking public listings under Trump's administration of supportive essential crypto measures. First Digital Group, the Hong Kong company that issues FTUSD stablecoin, Plastic Republic, essentially public by merging with special purpose acquisitions company SPAC, called essentially CSLM Digital Asset Acquisition Corp 3, which is listed on New York Stock Exchange. The SPAC essentially raised $230 million so far through initial public offerings on the Nasdaq stock market in August. The planned merger essentially includes a private investment in a public equity deal, although details are essentially reportedly still being essentially worked out. President Trump signed the Genius Act into law essentially on July 18th regarding establishing the first federal regulatory framework for stablecoins, which was brilliant. Hence why this company essentially is moving forward to go public. FTUSD is a stablecoin issued by First Digital with roughly $920 million inside market, essentially in the market circulation, down significantly from the $4.4 billion at its peak in April 2024. The company also manages reserves as essentially for True USD, a stablecoin operated by tech company. At press conference reported by essentially Cryptopolitan, Justin Sun, the founder of the Tron blockchain and advisory to the tech company, accused First Digital Trust of rerouting their True USD reserves offshore and fabricating transactions and documents in hiding transfers. So it's a bit of a situation going on First Digital, but they are going public out of Hong Kong. It's some sort of a good news, more companies going public regarding the blockchain sector. But now moving off that to the Fed. So the Fed is about to do a speech, if I'm not mistaken, in hours time. So it's just about starting, or just about ending. The Fed essentially chairman Jerome Powell critical speech is coming soon. So here is the latest essentially details and times. Cryptocurrencies and US stock markets started this week lower as investors adopted a cautious stance. Markets are focused on this week's key economic data releases and policy signals from Fed Chair Jerome Powell. Fed Chair Jerome Powell will deliver his speech on December essentially 2nd. At 4 essentially UTC essentially Eastern Time at 3. Investors are searching for new clues about the short-term direction of monetary policies. Bitcoin essentially Sysmith.com will provide details for the speech for you. The data to be released essentially throughout this week includes the November ADP employment report on Wednesday and the September essentially personal essentially PCE index on Friday. That's going to also be released as well. These data essentially will be key in shaping expectations for potential Fed interest rate cuts in December. Meanwhile, in Washington, discussions about who will be appointed as the Fed chair have intensified. Markets are growing expectations that a more dovish candidate could replace Jerome Powell. White House economic advisor Kevin Hassett has essentially stated he would accept the Fed chair position if elected. Treasury Secretary Scott Benson also indicated that the new chair candidate could be essentially announced before the beginning of the year also. Now, moving on to regarding a Fed speech that is possibly coming. Could be bad news, could be good news. Jerome Powell is either going to be bad or in the middle. Honestly, I'm counting essentially the days that he is completely removed from his chair. It's the same way the crypto space was counting the days until Gary Gensler gets removed from his chair. Now, Trump family is what we're going to talk about next on tonight's live. The Trump family essentially, before I actually talk about Trump family, let's go inside the comment section first. As I previously, this is live, which means if you do have any questions, go for inside the comment section. Let's see where we're at inside the comment section. The fact that everyone inside the XRP Army treats it like a fight club makes me think something is up. XRP slowly, surely, I have plans this time. Let's go. All-time crypto gang right now. First rule of Fight Club, never talk about Fight Club. Let's go XRP, XLM, XDC, HBAR, and let's go Scots. Now, Trump family. Essentially, Donald Trump Jr. came forward when he was asked in an interview, why is these families so big on the crypto space? And it's something that I shared with you in the past. It's that essentially they were, kicked out of the banking system up to a certain extent. So, Trump family turned to crypto after bank essentially access cut, says Trump Jr. Donald Trump Jr. said today that the family moved into crypto after banks stopped returning their calls during their political rise. The change began in New York when leaders cut access to financing, which forced the family to seek alternatives. The comments came during an interview where he explained why crypto became essential for their operations. And this is why, if the banks will cut somebody like the Trump family access to the banking world, I mean, who is in say that they'll do it to you? And this is why people should be going more towards stablecoins and wallets and shifting over from the banking sector. Because if they will do that to you in a political campaign and you're trying to run for president, if you're the little guy, the bank could just squish you like a bug. I mean, if they're going to be shutting down the Trump family from their own bank accounts or access to any sort of finance, they'll squish the little guy like a bug. Hence why, stablecoins, wallets, cryptocurrencies is where you want to be heading towards. Trump Jr. noted that the family faced a sudden freeze from leaders who once supported their real estate work. He said banks in New York previously approved loans with ease. However, that changed once the politics entered the picture. This change introduced a financial pressure that pushed the family towards decentralized systems. He added that the issue escalated when subpoenas arrived, which exposed what he described as a system that favored those with access. The situation placed the family in what he called the position of regular individuals who struggled to access basic financial services. Imagine that the Trump family felt like regular folks, 9-to-5 regular folks. He said this experience raised questions about how fast financial access could disappear when they don't like you. The interview continued with Trump Jr. pointing to the inefficiencies he saw in real estate transactions. He said blockchain could remove layers of fees, notably title insurance costs that add pressure to property deals. He argued that decentralized tools offer practical fixes rather than trendy issues. However, he stressed that the family adopted crypto because traditional financing shut them out. He also said the move happened during a period when lawsuits from New York's Attorney General added more strain. This context shaped their belief that crypto offered more reliable access. Trump Jr. also referenced limits to Trump's organization placed on international deals during the first administration. He said the company stood foreign projects essentially to avoid conflict claims, yet received no credit for doing so. The backdrop, according to him, reinforced their decision to build new ventures like American Bitcoin, World Liberty Finance, USD1, and the list goes on. He closed the segment by saying they now follow all available rules as they grow these projects. He also noted that the family made the shift because access to traditional finance disappeared, not because crypto looked fashionable. Great statement, honestly, by him. It is a statement that everybody should, hate the Trump family, love the Trump family, whatever side of the spectrum you might be in. The guy is speaking absolute facts. If the banking space could shut down somebody like the Trump family and stop all financings and all access, imagine what they could do to the little guy. Hence why we should all honestly be heading towards stablecoins, essentially wallets and cryptocurrencies, instead of being reliant on a banking system that could squish you like a bug. Now, moving on essentially from Donald Trump Jr.'s speech to David Sacks. David Sacks calls the New York Times report acquisitions a nothing burger. So what is happening with David Sacks and what is this New York Times paper that was released on him? According to the essentially New York Times, David Sacks, who is the crypto essentially advisor for Trump, has been having secret meetings and sitting down with crypto lobbyists and pushing crypto agendas. And according to New York Times liberal journalists, this is bad. But when essentially, Biden's administration of circus freaks was sitting down with Green Party people who were saying put more turbulence, essentially turbines up and windmills up and essentially solar panels up, that was all good. Save that whole agenda of saving the planet because it's heating up, apparently only for poor people. Honestly, the planet is only heating up for poor people because if you're rich, it's not heating up for you. Because the people that are essentially telling us to, ride bicycles everywhere and walk everywhere are the exact same people that take private jets to everywhere they go, especially the meetings that tell us to walk everywhere. David Sacks, a major tech figure and advisor to Donald Trump on AI and crypto, is at the center of a controversy right now after accusations of conflicts of interest. For him, these allegations are just a nothing burger analysis of clash that reveals tensions between innovation, politics, and media. And I know where all of this is arising from. You see, the Democrats tried to make Trump look bad just a few days ago regarding Trump being listed in an email by Epstein. And the news on the liberal side went ballistic with the news. Trump and Epstein together. And the only thing that actually happened was Trump's name was mentioned in an Epstein email. Just mentioned on an Epstein email. Not that it was a conversation between Trump and Epstein. No. Just his name was mentioned. The ironic part was the person that released this document More documents were released on that, where the person that released the document of an email saying essentially Trump's name, she was accused of actually talking with Epstein, while Trump's name was mentioned by Epstein in an email. A dog that doesn't bite, he said, regarding a dog that doesn't bark regarding essentially Trump. Trump's name was mentioned in an email released by a person, a Democrat. Ironically, that same Democrat was the exact same person talking to Epstein on messages. So which one's worse? Having a conversation with Epstein or being mentioned by him? Both are bad, but which one's worse? So that didn't work, obviously. The Democrats trying to, turn and twist the news, as they always do. Any politician does, trying to turn and twist the news. It can be Republican side, Democrat side, liberal side, conservative side, whatever side it may be. Politicians are very good at twisting and turning the news. But they tried their best to make Trump look bad, but it backfired. So now, what's their new agenda? Trying to go after, essentially, Donald Trump's crypto advisor. Honestly, every single hurdle we have to jump through, it's coming from the Democratic Party. They're just relentless to keep people poor as much as they can possibly. They just love the idea of people suffering in every possible way. I don't know what it is with the Democratic Party, but I've said this before. They are definitely not pro-America. They are anti-America all over the place. So the news thing that's going on. The New York Times recently published an article accusing David Sachs, nicknamed the Crypto Tesser, under the Trump administration of using his position to essentially favor private companies. According to the New York Times, Sachs allegedly used his role to influence defense contracts, but also to promote companies such as Nevada, essentially Joe, Grook, or in which essentially supposedly has financial interests in. Just want to point this out as well. Essentially, Nancy Pelosi, for example, just pick one person. Nancy Pelosi's portfolio beats hedge funds. Hedge funds. In some hedge fund companies, there are thousands to 10,000 people on a worldwide basis. And she's one person beating hedge funds. That's okay. We all know for a fact she gets inside information, because Nancy Pelosi does not look that intelligent to beat 10,000 team hedge funds. So we all know that she gets inside information. But that's okay, because Nancy Pelosi is a Democrat. And again, it's not just the Democrat-Republican situation, it's just a politician situation. But more essentially favors the Democratic side because of the BS that they essentially pull. But that's okay, because it's Nancy Pelosi and she's a Democrat, and she's all for about saving the planet and so on. And that's okay if she's getting inside information, having conversations with CEOs, beating hedge funds for essentially ridiculous levels. That's okay. Pocahontas, her wages don't add up to her portfolio. That's okay, even though she might be having conversations with CEOs. But this, regarding David Sachs having a conversation with crypto CEOs or so on, no, that's a big no. That's a big no. That's inside information. That's inside trading. They're just having conversations. And let's just say even if they're having secret meetings and David Sachs is going to become a millionaire because of all the secret meetings he's been having with CEOs of crypto companies, who cares? Honestly, if there are people actually reading this and going, David Sachs is going to become a millionaire from crypto companies, who cares? The same way when it comes to Nancy Pelosi, you guys don't care. Essentially, people out there don't care about Nancy Pelosi. Some people do, which they should do because it doesn't add up. But the same way people don't care about Nancy Pelosi's situation of beating hedge funds, they shouldn't care about David Sachs either. Do you know why? Because when Nancy Pelosi makes money from her insider CEO sit-downs, we don't make money. We never did and we never will. But when David Sachs has a sit-down CEO crypto meeting, we make money. Not on that same day or same night. Over time, we make money because he's bringing innovation. He's pushing crypto agenda into politics, into regulations. So we make money from that. So actually, David Sachs could make as much money as he wants. I couldn't care less. David Sachs could get paid $1 million from each meeting he has with a crypto CEO, because it still makes me have money. It still makes the rest of us make money as well. So he's actually bringing innovation. So let the guy make a few bucks. Honestly, let the guy make a few bucks. Let them make 10,000 from every sit down he has, 500,000 from every sit down he has, $1 million from every sit down he has. I couldn't care less, because what footsteps he takes, puts essentially money for us on the side. Because the sit downs you would have will lead to regulations, will lead to essentially political agendas for the crypto space, and so on and so on. It's all positive for us down the road, anyways. Let the guy make a few bucks. Nancy Pelosi is making more than a few bucks all these years. David Sachs quickly reacted in a series of essentially posts and through a letter from his lawyers. He calls a New York Times article a nothing burger, a baseless scandal. According to him, the New York Times deliberately ignored his responses and distorted the facts to serve a essentially narrative. I'm not surprised whatsoever. The New York Times not being truthful or honest, it's like the BBC. I mean, the BBC is always truthful. The BBC has the most checkered past I've ever seen from any news channel. But, you know, the New York Times has taken a page out of the BBC. David Sachs claims to have declared all his financial interests to the Office of Government Ethics, or essentially GE, before taking office. He specifically essentially have disclosed his position the concerned essentially companies following ethical recommendations. His lawyers from Claire Locke's firm sent an open letter to the New York Times demanding a retraction and threatening essentially defamation lawsuits. For Sachs, this affair is not only a matter of personal reputation, but also a stake for their entire crypto sector. In an environment where trust is crucial, such acquisitions can have repercussions far beyond the individual. In insights on the need to separate facts from speculations, especially in a field as scrutinized as crypto. The Trump administration essentially made Bitcoin and crypto a pillar of its campaign, promising to make the United States the global crypto capital, and that's all that matters. In this context, the appointment essentially of figures like David Sachs seems logical. Can the presence of officials linked to the companies investing in crypto really be surprising? However, this strategy raises questions about the risk of conflicts of interest. For Trump, essentially, it illustrates the dangers of essentially administration where personal and public interests mix. For his supporters, however, this approach is necessary, essentially, to simulate the innovation. They believe traditional regulations hinder the growth of booming sectors like the crypto space, which is facts. Yet, how far can we go without compromising public ethics? Please, ethics. The words ethics and politicians are just not in the same sentence, and they'll never be in the same sentence at all. So the idea of any politician, I just want to point this out, any politician, public, essentially any politician, Republic, Democrats, Liberal, Green Party, not jobs, any politician group you may be in. The words ethics and politicians just not in the same sentence, ever. If it is, it's just full of lies. Because no politician has integrity. None whatsoever. At a time, essentially, when US legislators want to ban Trump from all crypto activity, the clash between David Sachs and the New York Times goes beyond a personal dispute. Whoever the journalist may be from the New York Times, you're a moron. Honestly, you most likely got paid by essentially one of these liberal groups, or you're a liberal yourself and you think you're changing the world by writing a stupid, essentially Times article about David Sachs trying to essentially downplay the crypto sector, the innovation that's bringing to the table, so on. Honestly, get a life. Genuinely. To the New York journalist that essentially wrote this piece article on David Sachs, get a life. Now, XRP is what we're going to talk about next. Moving off the stupid article to XRP. Good news. Before we talk about XRP, let's go inside the comment section first. Let's see what's happening there. Then we'll go straight into the next news on Finance Live. Let's see where we're at. We were at here Monday, and regarding that crypto project, it's an okay project, is what I said before. And I'll stand by it. It's okay project. Let's go Miles. Let's go Scott. Not the planet's getting warmer for just the poor. Definitely circus freaks. Activities for sure. Facts. Miles, all this is not 100% Democrats. There are people within his own party doing a lot of this too. I agree 100%. I don't like politicians in general, I'll be honest. They're all full of BS. I'm a Democrat, and Pelosi is pathetic, just like the rest of the politicians in both parties. I agree. But what I'm trying to say is it's just mainly the Democrats that are throwing hurdles for the crypto space. Since Trump became president until now, the Democrats have been throwing hurdles. They've been throwing hurdles before Trump became president as well. I mean, Pocahontas, Democrat, she tried her best to get Gary Gensler on her side and stop the crypto space, which worked until Gary Gensler was removed. Miles, how much money has Trump family made since he has been back in office and due often to decisions he has made? It doesn't help or hurt my pocket, but let's keep it honest about all this. I agree. and I've said this before, Trump's family has made billions inside the crypto space. Honestly, Trump's family has made billions inside the crypto space. Good for them. Because what Trump's family is achieving is going to be making us millions also. So good for them, honestly. I'm a Democrat, and Pelosi is 100% agree. The only thing that bothers me about stablecoins, on the day backed by fiat, as of now, I only want to invest 100% backed securities that are not backed by fiat. Fair enough. I have never been Pelosi, Schumer, or Cruz, and a few others. I've never been fans, so they're all crooks. We little people are trying to make it. I agree, 100%. The BBC is not a reliable source. No. The BBC is the worst source of news. Any news channel pretty much is. And what about Al Jazeera? Worst. Al Jazeera's perspective in general is biased. It's very biased. Al Jazeera's perspective is extremely biased. The BBC's is biased. The New York Times is biased. The ABC's is biased. Fox News is biased. All of these news channels are biased and essentially push their own narratives. Now, whatever their narratives might be, to make one group look bad and one group look good. But that's just what the news channels are for. News channels, news journalists, that's all they do. They all just push their own narratives. Never the actual news. In a sense, it's the actual news, but with a twist to push their own narrative. So regarding essentially BBC worst, Al Jazeera worst. I mean, they're all just pushing their own narratives, to be fairly honest. Hello, Miles and CMF. Good to see you as well, Emma. How you doing? Now, XRP. XRP ledger activity surges and highlights institutional moves. So there is, positiveness coming out of whatever happening inside the crypto space. The amount of manipulation that we have inside the crypto space. There's a lot of positive things happening. And then regarding the 9 out of 10 days of inflows for XRP. So XRP ledger activity surged with over 40,000 transactions driven by institutional players reinfiguring essentially accounts on November 29th, 2025. And significant XRP inflows in US ETFs. The increase indicates large-scale institutional onboarding and liquidity preparation, potentially leading to stronger market engagements and price acquisitions. XRP ledger activity experienced an unusual surge with over 40,000 auto-set transactions reported. This increase is linked to essential institutional activity involving custody systems, expansions, and market maker configurations. Multiple institutional actors alongside new participants were involved. Custodians, essentially, market makers and automated systems took actions, highlighting a shift even after BitGo's operations ended. This activity impacted the crypto market significantly, correlating with a massive $643.92 million of net inflows for XRP ETFs, and so far $666 million net inflows for XRP ETFs. Financial effects are profound with the ETF assets reaching $676.49 million now. These shifts imply increased institutional confidence and positioning the XRP ledger ecosystem. Such activity aligns with past tendencies where back-end essentially surges often signal network upgrades or liquidity expansions, and increased regulatory essentially acceptance indicated by ETF listings support this trend. Long-term implications might also include broader institutional adoption for XRP as a viable settlement asset. Historical patterns and current financial infusions suggest potential policy price rallies through market complexities remain a factor. And someone is doing a lot of account sets TXs on the XRP ledger recently, even after BitGo stopped, said Vet, which I like Vet. He's a good person. He's inside the crypto sector. If anybody knows him, he's an XRP ledger contributor. Vet is in my point of view, a smart person, intelligent person, very respectful person as well. And he makes a great point, honestly. Regarding the ETFs, Bitcoin ETF, Ethereum ETF, Solana ETF, XRP ETFs, out of these ETFs in the month of November, XRP did quite well compared to the rest, which is good news. It means that the appetite is still there for essentially institutional appetite is there. Institutional appetite is there for XRP, even when the market's on a downtrend. Also, if you have heard the news, or if you haven't heard the news, just want to essentially give you some details on it, which is Ripple to expand XRP RLUSD payments in Singapore after securing a license. Ripple has received an approval from Singapore Monetary Authority, the MAS, to expand payment activities under its major payment institution license held by the subsidiary Ripple Markets APEC, the crypto giant announced today. This expansion follows the crypto-powered fintech company to broaden its regulated payment offerings to Singapore customers, including via essentially XRP, essentially cryptocurrency, and Ripple's own RRUSD dollar-backed stablecoin. MAS has set a leading standard for regulatory clarity in digital assets, and we deeply value Singapore's forward-thinking approach, said Ripple's president Monica Long in a statement. Ripple has always taken a regulation-first approach, and Singapore is proof that innovation thrives when rules are clear. These expanded licenses strengthens our ability to continue investing in Singapore to build the infrastructure financial institutions need to move more such money efficiently, quickly, and safely. Ripple Payments platform utilizes crypto tokens like RRUSD and XRP within a global payment network to facilitate essentially what the company said are fast and transparent cross-border transactions for banks. Crypto companies and fintechs, in short, it allows businesses to launch essentially digital payment services quickly without infrastructure essentially costs. Key features include settlements in minutes, including digital essentially payments, signal onboarding to replace multiple essentially partners, and simplified digital asset access without requiring additional bank relationships or specialized infrastructure. The Asia-Pacific region leads essentially the world in terms of real digital asset usage, with on-chain activity up roughly 70% in the Asian market space compared to the Western market space. Year over year, Singapore sits at the essentially center of the growth, said Fiona Miri, the Ripple's VP and Managing Director of Asia Pacific, in a statement. With this essentially expanded scope of payment activities, we can better support the institutions driving the growth by offering a broad suite of regulated payment services, bringing faster, more efficient payments to our customers. XRP is the fourth largest cryptocurrency by market cap, was created by Ripple's founders and surged to all-time new high price of essentially $3.65 in July, breaking 7 years as a record along the way. That spike was fueled essentially in part by regulatory optimism and investor excitement over anticipated ETF approvals. But the price of XRP has stumbled in recent months, despite the recent launch of XRP funds, with the coin recently trading hands at $2 after falling essentially 20% over the last 30 days, including a 9% drop over the past 24 hours. The dollar-pegged RRUSD has a market cap of $1.26 billion, 24-hour trading volume mark of nearly $79 million per data from CoinGecko. I'll be honest, regarding all the ETFs, XRP ETFs are bringing quite better inflows than the rest are in a market space like this. The market is still being heavily manipulated right now, to be fairly honest. The crypto space essentially is right now being heavily manipulated. And there's multiple agendas on the table. One, are they essentially pushing people more towards essentially stable coins so we can have a dollar dominance in a digital world, which also strengthens the US dollars in a fiat sense, going to digital world borderline to regulations? Two, are they manipulating the market space at this level because they can, because we're just about to go into essentially regulations, and when regulations happen, manipulation doesn't go away, but it slows down? Three, are they doing this to us essentially right now to push a lot of our positions because the next client in the crypto space that has been regulated for is the institutional sector? Regulations institutions will mostly be happening in 2026. So it's crypto markets has been heavily manipulated now before that. There's multiple factors in play, but do you know what they all lead to? All the outcomes, you know where they lead to? Fireworks. So the market space that we're in, price action that you're seeing, you know what's going to happen next anyways. There's so much good news inside the crypto space. There's so much institutions entering the crypto space. And just today I shared you an institution that's about to go public inside the crypto space. Out of Hong Kong, about to go public in New York. Or essentially Singapore giving a green light to Ripple essentially. So on that note of there is actually so much good that's happening inside the crypto space, but overshadowed by the exaggeration of the bad news inside the crypto space. Don't let the bad news get to you, because there's so much more good news inside the crypto space than there are bad news. But unfortunately, the bad news always gets amplified while the good news doesn't. On that note, we have reached the endings of tonight's live. This was the CMF Live Show. This was episode 412 of the CMF Live Show. You can tune this live Monday, Friday, 10 p.m. London time onwards for the most recent news regarding cryptocurrency, CBDCs, AI politics, and regulations. So in other words, tune tomorrow for episode 413 of the CMF Live Show. And also, disclaimer of this live show, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. Before we do go, obviously, let's go start the comment section first, and then we will call it a night. Let's see where we're at. We were here. Miles, I agree with you about the news channels. Unless we observe it ourselves, they are all ridiculous. I agree 100%. Let's go, Scott. Share the live. Let's go, Scott. There are 15 ETFs still on the way. I agree. Joe, soon. Okay. This is a great show. Don't get twisted. Facts. Let's go. Repeat and share the live. Let's go, Scott. By the way, thank you so much to everybody from the CMF who has smashed the like buttons and the retweet buttons on X. If you're watching us on YouTube, thank you so much for you to essentially for liking the live as well. If you haven't, smash the like buttons, smash the retweet buttons, and put a comment outside the live. And for people that followed or subscribed during this live show, thank you so much and welcome to the CMF. Huge news from Singapore and XRP ETFs are being extremely successful. Yes, it is, John. Let's go. Stormy, let's go. Let's go, CMF. Let's go, Scott. Let's go, Ray. Great live, Miles. Thank you, John. Let's go. See you tomorrow, same time as usual. Thanks, Miles. Have a great night and see you tomorrow, same time. Let's go, Autistic. See you tomorrow, same time as usual as well. No problem. Good night, Miles, and all the CMF. Thank you for great live news. And let's go, JP. See you tomorrow, same time as usual as well. Night, Miles, the CMF. Let's go, John. See you tomorrow, same time as usual. Thanks, Miles, for a brilliant live show. See you tomorrow, Joe. See you tomorrow, same time as usual as well. Thank you, Miles. Good night, everyone. Let's go, Stormy. See you tomorrow, same time as usual. Thanks, Miles. See you tomorrow. Mike, see you tomorrow, same time as usual as well. Great show. Take care, Miles, the CMF. Ray, let's go. See you tomorrow, same time as usual as well. Congratulations on 412, Miles. Let's go, Scott. Thank you so much, brother. Thanks, Miles, for all the good information. See you and all CMF tomorrow night. Let's go, Addy. Great positive news still, Miles. Keep the faith. Let's go, Paul. See you tomorrow, same time as usual. Buckle up for the ride, CMF. Let's go, JP. See you tomorrow, same time as usual. Good night, Miles and CMF. Thanks for great news. See you tomorrow. Free forever. See you tomorrow, sometimes as usual. Night, Miles. Family, Susie. See you tomorrow, sometimes as usual as well. Thanks, Miles, for another great show, Miles. As always, you are prepared and through and through. Love, my brother. Let's go, Scott. See you tomorrow, brother. Same time as usual. Thank you, Miles and CMF. I'll see you tomorrow. Have a good night. Carlos, see you tomorrow, same time as usual as well. Stay positive. Market is just positioning itself exactly. Let's go, John. See you tomorrow, same time as usual as well. I will see everybody tomorrow, same time as usual. Everybody have a great day or good night, depending on where you're around the world. See everybody tomorrow, same time as usual for episode 413 tomorrow.